And here we go. Hi, everyone. My name is Adam Bentley. I'm with the East Central Iowa Council of Governments, and you are joining us with our webinar series regarding the Revolving Loan Program. This is actually the first part of a series that we are intending to have throughout the year, focusing on economic development, recovery, resilience from COVID-19, but may dabble in a few other items as well. A little bit about our agenda today, and I'm going to actually share my screen here with folks. Well, actually, let's share my screen here with folks. All right, a little bit about our agenda today. We're going to do just some quick introductions of the panelists that we have with us at the moment. And then we will do a little housekeeping here too. If you have any questions in Zoom, there's the chat box on the right-hand side. Feel free to ask any questions that you might have. We'll get to those questions by the end of the presentation, I promise you that. And also at the bottom of the Zoom is a poll, which you're more than welcome to take. It just kind of gives us a little bit more information about how you heard about our webinar series, and if you are potentially thinking of using the Revolving Loan Fund program as well. We'd like to be able to know that. We might be able to reach out to you and have some conversations with you. So before we get started, I would like to actually do kind of around the room a little bit. Again, my name is Adam Bentley, and I am a senior planner with the East Central Iowa Council of Governments. I focus closely on economic development matters for our region. Robyn, why don't you go ahead?
Oh, my name is Robyn Jacobson. I administer the Revolving Loan Fund program here at ECICOG. So if you have any questions, just give me a shout.
Brittany?
Yeah, I am Brittany Rempe with ECICOG as well. I'm a communications specialist, and I'm essentially here today just to provide technical support.
Thank you, Brittany. Very, very important.
Yeah.
And then Miriam, if you wouldn't mind just introducing yourself and what business you operate.
I'm Miriam Vakulskas, and I own and operate Diamond Leaf Jewelers in Coralville.
Great, thank you. So before we kind of get into the Revolving Loan Fund, some of you may have just some curiosities about what what ECICOG is. So I wanted to give just a brief touch point on what we do and what we are. We are a regional planning agency. So we cover a number of counties within East Central Iowa. We're actually created by our counties. So we have a board of directors that oversees our operations. Many of those board members, they're all from those counties. Some of them are elected officials, some of them are citizens, others are staff who work for maybe a county or a city. And so we're overseen by public officials, and we do various things throughout the community. We focus on economic development, we focus on community development. We'll talk a little bit about those items. This is our region. We make up 6 counties generally: Benton, Linn, Jones, Iowa, and Johnson and Washington counties. We also have involvement in Tama and Cedar County as well, but our region, generally speaking, for the most part, are those 6 counties in East Central Iowa. Like I said, a little bit tough to maybe see this screen, but we dabble in a bunch of numerous different kind of technical services, and many of our clients access these services. So for community development, we work on comprehensive plans, land use, zoning, downtown revitalization. Environmental services, we work on watershed planning, hazard mitigation. If you've ever heard of 380 Express, we are a big part of the backbone of that program between Cedar Rapids and Iowa City. We do a number of different housing rehab programs and assist with the housing trust funds. We're getting into economic development, and we've definitely been involved with business loans pretty much ever since the Cedar Rapids floods back in 2008. Most of our services that folks use, though, I mean, a significant number of them, have to do with the business loans or housing inspections, or usually something in the ballpark of our CDBG housing programs. That's where we do a lot of, that's how we kind of touch a lot of our communities. And so we bring technical skills, we help plan for the future for our region, and we really are kind of that collaborative connector and facilitator for the area. That's enough about ECICOG. I'm going to go ahead and let Robyn talk a little bit about the Revolving Loan Fund and get into some of the nuts and bolts of that program. Robyn, it's all yours.
Okay, all right, thanks, Adam. I'm going to just do kind of a generalized overview of what a revolving loan fund is. And so just know, obviously, we offer business assistance to startup and small businesses in the 6-county region, including the metro areas. So obviously, Adam had said what our region is. We are in the 6 counties here. So it would be the Benton, Iowa, Johnson, Jones, Iowa, and Washington counties. It is just those 6 counties that we do work in for these loans. If you happen to be outside of those areas, there are other agencies that have revolving loan funds as well. So if you happen to know of anyone that might need one in Cedar County or any of those more eastern counties or southern counties, just let me know and I'll help figure out if there's any other RLFs in the area. Okay, what is a revolving loan fund? Well, it's simple. What happened for us is the federal government, specifically the Department of Commerce, the Economic Development Administration, gave us a grant. And so when we made those funds available to businesses at the time as a fairly low interest rate, and then as they repaid us, those loan payments allowed us to reborrow out more money. And it just is a continual circular hopefully anyways, a circular pattern, and you have very few defaults. So that's how we continually do this. Now it was replenished here with the CARES money for COVID-19 relief. So that's a separate fund, but right now, so we have 2 revolving loan funds at ECICOG. And so they both will eventually do, well, the one is already doing all this because we've already reloaned things a couple times over. And once we get this initial CARES money out, hopefully the same thing will happen is people will make payments and then we'll go back and loan out even more money. So like I said, we have 2 funds. Historically speaking, Adam had mentioned that the first grant we got was with local match involved as well. It was about 4.6 million and that was in 2009. We are loaned up to 11 million already. So like I said, that circular pattern, we've reloaned a couple times over. And right now we have about 900,000 in that loan to continue to loan out. The new CARES funding on the right there is obviously funded through EDA as well. That was a 4.25 million with no local match required. So we still have about 1.9 million to loan out. We are doing 0% interest for 2 years and then 2% for the remaining term. And the term, once this money, we have it until the grant, we have until June of 2022 to get the grant all loaned out. So hopefully once that's done, we'll start that revolving process. And that's when those fantastic rates will also change though.
So Robyn, and I may just jump in here and ask you a quick question if that's okay. So between these 2 funds, if someone was applying for the RLF, would they need to necessarily know which fund they wanted to apply for, or would they be directed to any of the funds? How would they know what they potentially could access?
It's a good question. And what they're going to do is they're going to get on ECICOGRLF.org and you're going to fill out an application, and that application isn't going to specify which fund. I make that call for you. Like I said, the CARES funding has to have either a COVID-19 direct effect from that, or you have to create, tell me the nexus between the job creation you're making from that to COVID-19. So EDA is very specific on how they want this money spent. And so we don't have the same limitations on the legacy fund. So it will depend on what your application looks like. And then I make that decision.
And you mentioned job creation. Are there other stipulations with the CARES Act? Does it have to be, for instance, could it be job retention as well?
Yes, job creation, job retention, my fault. I shouldn't specify that. I think they're looking for more job creation because they know that, unemployment did spike there quite a bit. Now, Iowa tends to be fairly low on the unemployment scale anyways, and we're getting back to, if not reached, the normal I guess, unemployment rate that we had prior to COVID-19, but we definitely are looking at either retention or job creation for sure.
And I see that on the legacy fund, I don't see an interest rate. Can you explain a little bit about it? And I know we have questions at the end, but
Yeah,
just because I'm staring at it
sure.
right now, it's just popping into my head. So I'm going with it.
Sure. Well, right.
So-
Okay. Yeah. No, that's a good question too. Right now, and until May of 2021 here, so very quickly, I can use the same terms, the 0% for 2 years and the 2% for the remaining terms until I think mid-May. There's an actual date in there. Other than that, then it reverts back to what we used to have, which was a 3-tiered interest rate that was determined based on a risk matrix that we have. I'm not going to get into the weeds of that, but it's based on the prime rate, those 3 different rates. So depending on how risky we feel your loan is, that will determine the rate after May.
Okay, sounds good.
So obviously, who's eligible? Well, really anybody, new or expanding businesses. What I've seen lately, it's obviously just existing businesses is really what I should have put in there as well, because people are just trying to hang on right now until they can, things open up more. So I've seen more just existing businesses. Some of them have been positively affected by COVID-19. So they needed to have a little more money to expand what they've been doing. So there are some positives to this too. I don't want to be all negative here. Like I said, the big issue is creating or retaining jobs. And how are you going to enhance the regional economy? And for the new money, it's got to be COVID-19 related, or as it says, nexus to job retention creation. So those are things that I'll look at and probably have a conversation with any applicant just to see where they're at.
And in the application process, Robyn, I imagine there's probably maybe some questions related to, especially if we're going after funding that's related to the COVID RLF, there's probably questions in there that try to tie that applicant to, or that request to a COVID-19 impact.
There are 2 areas that will ask you about basically what do you need this money for? And I'm really depending on the applicant to explain exactly what they need that money for. How has COVID-19 affected your business? And so that way I can translate that to EDA so they understand that this application is indeed affected by COVID-19 and they don't have any issues with it. So there's a couple of narratives in the application that you'll have to explain that.
And when we say we get into a lot of acronyms, but generally EDA is the Economic Development Administration, just for folks, which is a part of the Department of Commerce. Okay.
So what is the application process? Like I said earlier, we have a new website. It's called ECICOGRLF.org. If you go there, there's a lot of information. There's FAQs. There's a couple of stories from applicants that have borrowed money and they share their story. The application, a link to go online and fill that out is on there as well. And there's resources that I've thought of that might be useful to applicants. And then there's just a link to me to ask any questions you might have. So like I said, the biggest thing I can advise anyone to do initially is go to ECICOGRLF.org and peruse that website and see what questions you have after reviewing that webpage. And then, so I'm sorry, I should go a little more. So let's just say you go there, you want to apply. So you get online, you fill out the application. I get an email saying, oh, you have an application. So I get on there and I review your application. From there on, you're going to have a business plan. You're going to have some financial information ready and available. You're going to have a personal financial statement. There might be some other things depending on your situation. And then I have your email at that point. So then I will definitely be in contact to let you know if there's anything additional that I'll need at that point. From there, we have a revolving loan fund committee meeting once a month. It's on the 3rd Thursday of every month. And they do the underwriting of this whole program, meaning they look at the worthiness of your application. I'm not the one that makes the decision. It's the committee that makes a recommendation to our full board. So you'll come and present because you have to present. So you have to zoom in and make your presentation. Just basically say who you are, what your business is, and what you need the money for. And then if they have any questions that you'd answer at that point, they'll make a recommendation. If it's a positive recommendation, it goes to our full ECICOG board for approval, which is the following week. And then after that, it's just a matter of me drawing the funds down from EDA and setting up a closing date for you.
So maybe it'd be good to talk a little bit about how that application process typically takes roughly a month, is what it sounds like, or so?
It does. By the time, we required that you have your application in by the end of the previous month to be considered for, so for March, let's say, you had to have had your application in by the end of February. And so by the time you get that done and, attend our revolving loan fund meeting and the board passes your application and I get funds down, it's probably more realistically before you close, more around maybe 5 or 6 weeks at that point.
At that point, after approval, they would then work with you for the duration of the life of their loan. Is that correct?
That's true. Yes, that's true. I do the loan servicing as well. So we set up ACH payments, and so they're fairly automatic. But any payoff information or just any questions about monthly payments, they would contact me.
Okay. Maybe one of the things that folks might think about, I don't know if this is in the future slides or not, but what are some of the biggest issues that most applicants might run into, either causing a delay in their application or that ultimately end up in a denial of their application, at least from your experience?
Well, like I said, I should be the last person you contact. Everything else you should have ready and done, meaning if you need help, what I find mostly from small businesses is that you might be a chef and you're a very good chef, but you're not the greatest business person. You're going to need help, and that's okay. There are sources out there. There are a lot of resources out there that are free that you should access. So like I always say, go to the Small Business Development Center, go to SCORE, have them help you develop a business plan, help you develop your financials, because the financials really are going to be what hinge on whether you're approved or not. We do look at your credit score and we do look at kind of the history of your business, but overall, your financials are going to tell us a tale. And so you really want to make sure that those are in line and digestible. And so there are people that can help you do that. So I always say, use those resources first. Don't rush into me, because if you rush your application, I guarantee you something will be missing and you won't know your financial information as well as you need to. And that can lead to a denial. So take your time.
We'll move here.
And so these are just some of the places that we funded. Some of them are in Coralville, Iowa City, Cedar Rapids, North Liberty, Anamosa, just different places that we've done loans. And so we do a variety of them. And obviously Amana. So, I mean, we do a variety. So we'd like to focus on, like ag IT and stuff like that, but we take what we can get when we get it. So, like I said, just take a look at some of these logos and you'll know we've done kind of a variety of different loans.
And maybe just to help the attendees get an understanding, can you describe for us, maybe for these businesses, what they were? I know we have Miriam on to talk about hers, but maybe it'd be helpful to know what some of these businesses were doing with their RLF funds, just as an example, some examples for folks.
Sure. The Amana Colonies had several loans through us, and it was mostly working capital loans. They spent a lot of their own money doing a lot of the construction. We did do some of the furniture, fixtures, and equipment for their little, if you see on the left part of that middle picture, there's a little barn there, or a garage door looking thing. Yeah. And that's an event center that they have for weddings. And so we got some of the, tables and chairs and that kind of stuff, but mostly working capital. Atlas Truck Bodies, we did a bunch of equipment for them. They do custom truck bodies. And so they needed a lot of big equipment to be able to bring a lot of the stuff that they outsourced into their own facility. So that was an interesting thing. And Reunion Brewery, we helped them. Of all things, we bought them cans, because aluminum cans throughout COVID-19 for breweries and any bar is because they did a lot of carry out for their alcohol. Aluminum cans are very difficult to find. And when you do find them, they want you to order in large quantities. So we help them buy cans. And those are just a few of them. And we also, just to throw out there, we administer other revolving loan funds. So depending on where you're located, I might be able to get you some money for within those parameters. On the left is just sort of an idea of what we've, different loans we've made. It's probably not fully updated, but, so if you were located in Marion, they have their own RLF as well. They're not big ones. These ones tend to be under 25,000, under 50,000, something like that. A lot of micro loans out there, but that's for the city general, the greater Cedar Rapids area, but also potential funding sources for anyone that is in those areas.
Okay, before let's move over to Miriam, and Miriam, I may have you just kind of introduce yourself one more time and talk about some of the talk about your business and some of the related information on how the RLF helped you.
Thank you. So, like I said earlier, I own Diamond Leaf Jewelers, which is located in the Iowa River Landing in Coralville. And my situation was maybe a little bit different than some of the other applicants in that I was a startup when I first approached ECICOG. And so I had, I guess, done a lot of the stuff that Robyn had described before approaching them for a loan. As a startup, the options were really limited on how to find startup money. There's options for small businesses, but the startup situation definitely changes things because you don't have those financials, like Robyn explained, are really key. You just have projections. So I think it's been a while. It's been about 5.5 years since I did this, but I believe my business plan was something around 30 pages long. So sorry, you had to read all of that. I was just trying to be very thorough.
Now, Miriam, can I ask, did you write that on your own, or did you seek resources to help with the business plan?
So I didn't seek resources. I did a lot of research on, I guess, what would make a good business plan, and poured through it for weeks and hours and had friends read it, and kind of took that approach. But in retrospect, our area has a lot of really good resources that you should use if you're a startup listening to this. Definitely involved with the entrepreneur section of the University of Iowa. And then also within the, I think there's like a state office for the SBA as well that you can utilize. But for me, my path was I met with a CPA and an attorney, and then finally started to meet with bankers when I felt like my business plan was ready. So there was a gap between what I felt I needed to open my business and what a bank was willing to give me as a startup. So, which is pretty common. And so for me, ECICOG really made that difference, because without that money, I would not have been able to open my physical location at that time. So I don't remember exactly specifically, I guess, what I put in my application for the utilization, but I mean, I was doing a build out and starting a business. So, I mean, it kind of just—
Can I just jump in for one thing, Miriam? Because you bring up a good point, and I feel like I'm getting into the weeds here and I'm going to confuse people, but you made a good point in that you were looking for gap financing. And when all of this wonderful interest rates go away, what will also happen is we're just here to finance your gap. So like if you have traditional financing, but they can't quite fund all of your project, then that's where we come in. We'll do about the last third of your project or so, 25 to 30% of your overall project. Right now we can fund 100%, but that eventually will go away too. So I just wanted to clarify that this was like 5 years ago. So it was slightly different rules back then.
Okay. Yeah, so that, I mean, that's definitely good to know though for current applicants. So another reason why I chose to, I guess, explore this option was because there was such a good local impact. I mean, really, as Robyn and Adam explained, it's such an amazing thing that, you know, you're borrowing this money and yes, you're paying interest, but it's very competitive interest compared to traditional financing. And all of that interest you're paying is going right back to our local economy. So I thought that was really, really awesome, because at least your interest is in a roundabout way helping you personally still. So I thought that was really great. In terms of the utilization of my funds, I guess, I remember at the beginning, it was really nerve-wracking opening a new business, and I was really meticulous about every single dollar that I was spending. I would pour over the contracts and with my landlord and different contractors and all of my loans. And so I know this isn't really ECICOG specific, but I just definitely encourage you to make sure that you do the same, because there were moments that I remember being so relieved that I knew my contracts so carefully, because with construction, things don't always go as planned. So that was really important, especially since, you know, every dollar I basically in my business plan was for a specific thing. So I didn't really want to have to borrow from another category. And then in terms of how the process went attaining the funds, I feel like Robyn definitely took that and broke it down really well already. I can kind of, I guess, humanize some of those steps a little bit. You know, I had to fill out this application that was kind of long, and there were definitely a lot of steps involved. But having already been through that process recently with my business plan, I pretty much had all of those answers when I was filling it out. I don't know if they still do this, but I think I had to include some letters of recommendation. Is that still a thing?
Yes, it can be. I mean, we're not hardcore about it necessarily, but it's nice to see, you know what I mean?
Yeah. So I obtained those, and then I had to, you know, like Robyn explained, describe what I was going to be utilizing the funds for and the types of jobs that I was predicting that I would be able to bring to the area eventually, and a pretty detailed budget. And then as a startup, I think I had 2 or 3 years of projections, and then a whole list of exhibits in that application. So the paper part wasn't too bad because I had already sort of put in most of that work with my business plan. But I remember after I submitted it to Robyn, and then she was so casual. She was like, "Oh, then you have to like pitch it to all these people." Back then I had to do it in person, and it was really intimidating for me. It was kind of like a Shark Tank. So
Robyn can be kind of a Shark Tank. Yeah.
And so it was in person, but then there were also people joining from like a conference call. So, and I was so nervous, like I can't even tell you any of the questions that they asked me. So I don't remember. But after obtaining the funds, ultimately, I mean, after that point, it was really simple. I had an issue where the location that I was originally going to open kind of fell through. And so then I was terrified that all my funding was going to fall through. But Robyn was really, really encouraging. She's like, "It's not a big deal. Like, just find a new location and then we'll have the board like approve it again. It'll be fine." So Robyn was really awesome to work with. And she sends us these little sheets that we have to fill out twice a year. And it seems confusing, but just keep your one from before. And get the hang of it. I don't know why it's like you only have to fill in like 4 things, but for whatever.
It's good advice. It's good advice, Miriam.
The one from before. And then do it early, because if you do forget, then at least Robyn won't be mad that you're at the deadline and you're asking her for help. So, but other than that, I mean, it's been a really good process, and I hope to continue to expand and maybe utilize the fund again. So
Miriam, if I could ask you, if you're okay with telling everyone, what did you use the funds for?
I mean, at that time I was just spending money on everything. So
I think it was a lot of working capital, because you had traditional financing for the build out. And back then I tended to steer people away from using our funding for build outs or real estate purchases, because it kicks in a bunch of environmental things. And so this, I think I steered you more towards maybe some inventory and working capital.
Yeah, because I mean, I had to buy all my inventory at that time too. So, yeah.
Got you. Thanks, Miriam. I'm going to open this up for questions from our audience here to see if we have any. If you have any questions, and I don't see any in the chat box, but if you have any questions, at the bottom of your on the right-hand side of your screen, there ought to be at the bottom of your screen, there's going to be a button for chat, and that should open up a chat box. And you're more than welcome to type your questions in. That's under the type the message here heading, and we'll be happy to answer any questions that you might have. In the meantime, I have a few more questions that we could go through while people might be coming up with some. If not, no problem. That means we've done a good job explaining things.
I can just expand a little bit. When we were kind of laughing about 2 times a year, I ask for something, because this is government money. It's nothing's free. And so there are just a couple things I need from you. And so twice a year, I send out a job creation form, because again, that's what this money is for: retention and expansion of jobs. So I will send out a very simple sheet, except if you don't track it from before, then yes, it can get a little confusing, because some people want to put their whole workforce in it every 6 months, and that's not how we have to count it. But just I wanted to let you know that that is one of the things I would have to ask you for a couple times a year.
Is there one audience member asked, is there a hard minimum credit rating for consideration on these loans?
Okay, well, is there anything in writing about that? No. We have a rule of thumb, let's put it that way. If you have below a 670, you're going to need to have like a co-signer or a personal guarantor that has a better credit than 670 or more, if that's helpful at all.
And then another question is, are nonprofits or cooperatives eligible?
Nonprofits are eligible. I don't have anything in my plan that says cooperatives are not. We have never had one that has come to us, so it would be a new situation. I'd have to talk to you more about that, I think, to get a feel of what it is you need money for, et cetera.
And for nonprofits, Robyn, is there any type of difference that they would feel in the application process, or any different requirements that they would have?
No. So, it's basically, we're going to be looking at, can you make your monthly payment? And so, as a nonprofit, obviously revenue is something sometimes can be hard to come by. So your financials are going to have to really be in order. Again, I have not funded a nonprofit, but they are eligible.
Maybe another question folks might have is, fees.
Okay, that's a good question. There is no fee to apply. There is a 2% closing fee, which is 2% of your loan. And that goes to ECICOG to fund my position and for loan servicing of the whole entirety of the loan.
any special, I think we get businesses here are rightfully wary of accepting federal dollars because oftentimes they come with strings.
Yeah.
So what should folks know about the regulations around these funds? Anything special that they should be, other than the piece of paper that they get? And the process is fairly typical of a financial review, so it's not seemingly that different from another process that they might have to go through.
Right.
But what separates potentially maybe our funding versus, say, a bank or some other source of funding?
Not a whole lot anymore, because like a bank, if you have a traditional financing, you're going to have to submit to them every year your financials, updated financials. And so every once in a while, I will, like once a year, ask people, I need your updated balance sheets and your updated P&Is. I'll update your personal financial guarantee information. Other than that, and then this job creation form, because that is my way of being able to track that for EDA. So really, those are the things that maybe are a little different. Well, that part is a little different than a traditional bank, because they're not going to care about job creation. They're just going to care about your financials. But there's really not that much. Now, we're going to a system that will only fund working capital and equipment. So the one thing I want to clarify for people is we used to fund construction and real estate, and I think I'm saying it probably a day early because I'm having the board amend the administrative plan I have. Those would have kicked in environmental review issues. Sometimes that can mean contacting SHPO and doing a 106 review, meaning to see if there's any historical issues with whatever real estate you're working on or want to purchase. If you use any of this money for construction over $2,000, you have the Davis-Bacon Act kicks in, meaning you have to pay a labor wage determined by the Department of Labor, which tends to run more than if you went out and got an electrician, somewhere, they might charge you a smaller market rate than what the Davis-Bacon wage determination would be. So those are all things to consider. Somebody was also asking about the loans and the terms. We're pretty flexible. Usually with working capital, we tend to do shorter terms, anywhere from 1 to 5 years, depending on equipment, and that kind of thing is 5 to 7 years.
And then our lovely panelist Miriam asked the question: are there any restrictions on how soon you have to use the funds once closing on a loan?
No, because I'm going to have to start charging you at some point. Those monthly things that will come in. Normally, if you get approved for a loan, I will send you a commitment letter saying you have 90 days to decide if you want the money or agree to the conditions that I put in, and then to close. But after that, you do what you want. But I'll probably start the repayment process a month and a half or so after that. So that's really up to you.
Is there any type of collateral that's required?
Yeah, well, there is. And every single loan, no matter what it is, unless you have some kind of spectacular collateral, you will have to sign a personal guarantee. That puts your skin in the game, and the committee really looks at that as a favorable condition. If you're willing to put yourself on the line for this money, then we'll put ourselves on the line to loan it to you. And then after that, if it's equipment, we expect to have the first position on that, meaning we'll either buy it directly for you, or we will put a UCC line specifying that this equipment is ours to sell if things go sideways. So from that perspective, those tend to be our collateral issues. We usually take a junior position to banks, so we're kind of required to do that. So.
Okay, that's kind of all the questions that I had. Miriam or Robyn, do you have any other things that you'd like to leave our attendees with? And attendees, this might be the last few minutes to write a question for us. Otherwise, I'm going to go ahead and put Robyn's email in the chat box so that you can contact her. But Robyn or Miriam, are there any other things you'd like to leave our attendees with from a thought
Well,
perspective?
I'll say this, Adam. I feel like I need to get as much, I have verbal diarrhea at this point because I want you to know everything all at once, but it's impossible to convey that to you in just a webinar. So please just call me or email me. I'm very responsive, especially to email. So I will try to explain things, more in depth at that point.
And Robyn, if I could ask you for the attendees as well, what is the website that they can go to? I just want to type it into the chat box as well.
Yeah, it's ECICOG.org.
And there they can find
FAQs, they can find if they actually want to apply, the link is right there to apply. My contact info is there, and any resources that I could think of, like the Small Business Development Center and the SBA and all that is there. So it should give you some additional questions if you go there and you can't find an answer anyways. I tried to think of everything, but
Thank you, Robyn.
Yeah.
Miriam, anything else you'd like to leave the group with?
I would just encourage you, if you're interested, to definitely reach out to Robyn because she is a wealth of information. So she's definitely a really good resource for small business owners.
Thank you, Miriam.
And for the attendees, I appreciate you attending. I appreciate Miriam and Robyn and Brittany for participating in our first webinar. And this has been recorded, I hope, and will be put on the probably the RLF website and the ECICOG website as well. So if you would like to refer back to it, you're more than welcome to. I did put Robyn's information in the chat box as well. So again, my name is Adam Bentley. It was great having you. Thanks, Robyn. Thanks, Miriam. Thanks, Brittany. Appreciate your time, and everyone have a good rest of your day.